being the first webinar for us, we thought that we will try to be completely transparent in what we are doing. There was a lot of calls, a lot of messages, a lot of questions from all of you in terms of depending upon the credit scenario in the market and how we are reacting and how we are strengthening our credit outlook. So we thought that through this webinar, we will tell you all what exactly we do and how we are doing it. And also to launch our new KredX Score 2.0 and tell you all in terms of how this is going to be read while investing, how this, what does this mean to you, all of you. So before moving in and telling you about the scores and other things, I thought let me spend few minutes in terms of telling you what exactly we do on KredX. So one thing that we do is we fundamentally do a financing of the trade finance and through the mode of invoice discounting. So what we do here in the invoice discounting space is we work with companies, small, big, medium, all the sizes, and we see that what are their account receivables and through which corporates these account receivables are. So an example is basically, let's say we work with the suppliers of companies like Toyota, where the companies has raised an invoice to Toyota and Toyota has approved the invoices. So please make sure, what we make sure, or please understand here that these are all approved invoices that comes from Toyota. But Toyota is going to pay them in anything, let's say 60 days. Now, to avoid the working capital flow with them, what we do is we give them the financing option by discounting their invoices at a discount. And what we do is we route the cash flow of the company to be coming to an escrow account. So this is a sacrosanct process which we always follow. Is fundamentally the cash flow should be coming up from Toyota. Now, if you understand, what we are doing here is the account receivable or the asset is for my smaller company, but the account payable or the liability is on the larger company. So when you are buying these invoices, fundamentally you are buying a liability of a larger company, which is which is similar to buying a corporate paper or a corporate bond of a larger company, but it's coming at a cost of fund or cost of borrowing of the smaller company. So it creates an arbitrage or a spread, and which makes it an interesting asset class for any investors to own. So fundamentally, when, let's say, Toyota invoices, a Toyota CP or CD is not available in Indian market, what through KredX is we define is that these you can buy a liability of Toyota and you can earn around, let's say, 12-13% kind of an IRR. So that's what we try to do on the KredX platform. As I said, that what we also do is we always go into a tri-party undertaking arrangement where we ask the counterparty or the anchor or the larger corporate to always transfer the fund into our escrow account for the payments that they have to do to those vendors. What we also make sure is in the undertaking is that the payment of all the invoices are coming to the KredX escrow account, and not just for the invoices which are discounted. So what it gives us is it gives us a lot of risk mitigant in terms of, for example, if the payment for one invoice is coming shortfall, there is always payment from other invoices which are coming, which can be adjusted for any other payment. So that's some of the risk mitigation things that we work on KredX. What we also do is we also work on with a lot of third-party agencies which provide us data to understand how the health of the different companies are. So so let me divide the entire risk part in terms of how we are onboarded into two pieces. One is fundamentally the origination or acquisition piece, where what we do is when we are acquiring or first onboarding a customer, what we do is we tell them that this is my acquisition process. So we take the undertaking into account. We create an escrow account for the vendor, and once the undertaking comes, we wait for the first credit from the enterprise to come into our account. Once the first credit comes, then only we will move ahead and allow the listing. Of course, before that, the risk team, which is an expert risk team, sits here, which looks into all the cases, the financial health of the vendor, the financial health of the enterprise, the cash flow, and various other patterns to make sure that they are good for acquisition and good to go ahead with. Now, the second aspect, once the discounting happens, is the portfolio management aspect. Since the discounting happens only for 30 to 90 days period, what we also always make sure is that the financial health of both the vendors as well as the enterprise is remains sound for the next discounting whenever it is going to happen. So there are some processes which is involved at the acquisition level. There are some processes which are involved at the underwriting at the portfolio management level. In terms of portfolio management, there are a lot of triggers also which plays into. In what we say in triggers is we continuously monitor the cash flow that is coming for the vendor from the enterprise. We also take a check on the credit profile of the enterprise as well as the credit profile of the vendor. We also looking into whatever external market signal that we are getting of the enterprise to see that the financial health of both the parties are good enough. So once this all can be looked into, then that is the time then we continue the discounting process to go on. So that's a little bit of additional information which I wanted to give it to you before moving into the next slide. So next, what we're looking into is fundamentally two-way. One is what we call as a human intelligence, which is a team of expert underwriters and in-house industry experts which are sitting here looking into each of the cases, and they're backed by a big array of data that is coming of not only internally mined but also the data that is coming from different sources, both externally. So we mine a lot of data externally from MCA websites to whatever available from government databases to external sources which can provide us any kind of a signal or any kind of different ways to underline that to identify that what we are underwriting or what we are saying is working good or not. So in the scoring part also, we use a lot of machine intelligence. So of course, our company, we always say that we are a tech first company. So as a tech as a foundation, there's a lot of automated process that is in the background. Just a few minutes back, I spoke about triggers. So we worked a lot on triggers. There's a lot of triggers that we there are a lot of triggers that will be working out that are ongoing process. I think we, as of now, is possibly there are 25 odd triggers that's already on production, and we keep on adding more and more triggers. How the triggers works is if there is any patterns which is not we defined it as green, amber, and red. And if any of the patterns are not matching, then it sends an amber alert or red alert to the risk team, which can take a countermeasure in terms of how to work. So again, all of you guys who are present there, just wanted to let you know that there will be Q&A session at the end of the session. So keep sending the question, keep your questions so that we can answer all of them at the end. So moving on to the next slide. Now, risk mitigation at KredX is business is evaluated on the basis of various things. So fundamentally, what we're looking into while onboarding any companies for bill discounting is first of all the financials of the vendor. We're looking into the financial of the enterprise or the counterparty, how good or strong they are. We also looking into the relationship. Typically, when most of the world thinks that trade is fundamentally a transactional relationship, what we have learned is trade is not a transactional relationship. It's more of a long-term relationship. So we looking into the relationship between the enterprise and the vendor to ascertain then how deeply they are working, how essential those vendors or suppliers are for enterprise. We also see the payment timelines and match it with the master vendor agreement or master suppliers agreement to see that if what they are saying in terms of the payment, are the enterprises are adhering to it or not. What it leads to is fundamentally to know that if the suppliers or the vendors are priority vendors for them or better vendors for them or not. We also look into all the invoices that comes to us we check it with the GST to see that all the invoices and the GST payments are matching or not. What is another thing which we always put a lot of onus on is the corporate governance piece. So we're looking into auditor reports. We really read into all the auditor reports, any comments or any adverse comments that is coming from auditors. We're looking into we also looking into fundamentally that are they doing the stat payments or not, which is means the GST payment, any kind of taxes payment or not. And if they don't, then we ask them to first do the payment before moving forward. So in a way, why we're looking into it is, in India, a lot of companies are promoter driven companies, and these kind of early indicators in terms of corporate compliances are something which gives us a lot of comfort, whether the company are managed professionally or they're running it as a mom and pop shop. So that's again very essential. We also looking into any kind of a legal proceedings that is going on against the company, and looking into the legal aspects of these companies and see that if there are any kind of cases which is going on which can adversely impact the business. So post all these analysis only is what a company gets underwritten and move to the next stage of evaluation on KredX parameter. So moving on to the next thing, I just want to also tell you in terms of what we were looking out into KredX Score 1.0, and how this, and then we will talk about what's there in KredX Score 2, and what has changed. So in KredX Score 1.0, what we're looking into is fundamentally, we look into, of course, the financials of the vendors, the payment timelines, relationship with enterprise, the enterprise itself, credit history, rating downgrades, etc., online presence, unsecured loans, and we score it in a scale of 1 to 100. Now, most of investors who are there with us, they know that we don't list anything less than 60 as on a platform, and typically the scores varies anything from 60 to up till 80. There are a couple of maybe companies may have got more than 80s, but fundamentally they oscillate around it, and that's where the majority of the companies are coming for. Now, what based upon a lot of feedback also that we got, plus the evolving market scenario, we realized that a lot of things are changing in this in the world, especially in India. For example, the rating that is given by the rating agencies are not something which you can trust, because there was almost like a 4 rating downgrade or which is happening in a day by rating agencies. So what we started looking into is alternative to rating agencies rated. We also started looking for alternatives in terms of how we can look into data inwards into our own database. Also try to infuse what all other things that we can work about to give a better score or a better view to all of you. So what we did is we moved to new factors. So we try to evaluate fundamentally the different scores in various ways. So we try to identify the different risks which is there. So we looked into the intent risk from the vendor. We also started putting more weightage on the enterprises. The financial aspects become more and more exhaustive. Plus, a big push that has happened from our side is fundamentally moving a lot more towards the cash flow based underwriting rather than the balance sheet based underwriting. What I mean is that when we were putting a lot of onus earlier on fundamentals of the even for the enterprise on the balance sheet, and that's where most of the rating agencies also looking into, we started moving towards the cash flow. So we started creating a timelines of when an enterprise, and this is by the way I'm talking about the enterprises and not about the vendor, but basically create a timelines of different debt or different kind of finance that has been taken by the enterprises, and plotting it with different kind of other measures for enterprises to see how the cash flow of an enterprise is changing. What we generally call internally is a balance sheet is a stale, because let's say if I'm looking into anybody's balance sheet right now, it's not has a listed company, we are getting a balance sheet of a year old, as compared to a cash flow which is more current and more substantial in nature. So we started looking more and more into the balance into the cash flow side of it, both for the enterprise as well as for the suppliers. What it also helped us is, since we are working with multiple suppliers of the corporates, we also have a sort of a bird eye view on the cash flow of the same enterprise for different vendors. So we are in a better position to also see that how is the short term obligation of the enterprises is as against maybe what the long term balance sheet is showing. So there was a more weightage that started going into those pieces of things. Also on the vendor side, we started looking into a lot of intent. So though we always looked into the invoices, what is the total value of invoices and what is the actual payment that is being done by the enterprise on those invoices, we started going back to the vendors and start asking them why there is a shortfall in payment that is happening. Anything which is more than a 5 to 10% of a shortfall in general in a vendor in an invoice payment, we asking for a written documents or written proof in terms of why there's a shortfall. And we also look for a patterns in terms of is it one-off or is it happening too often, to come to a terms in terms of why these things are getting repeated. So most of these new parameters that we are talking about has actually moved from scoring to filtering level. So what we started doing is we tried to separate out the scores with the filter. So when in KredX one score 1.0, when we were only we were filtering at the acquisition level, but then after that we are just scoring all the cases on a parameter, and anything less than 60 we don't use to put on the platform. Now with KredX Score 2.0, what we did is we separated out the filtering totally out of the scoring. So what we say that we will filter out everything which is bad at the or which is potential bad at the early stage itself, and whatever is filtering out from the risk filter, then is going to get scored at KredX Score 2.0. So this is sort of a graph and sort of a different parameters that we used in Tintu, and what is the different weightage for people who are more statistically inclined. This is something which is very important because we started putting a lot of variables as we started going into it. As I said that this KredX Score 2.0 is fundamentally a machine learning algorithm which looks into many aspects of it. We also looked into our own internal performances and potential default cases that could happen in our portfolios also to build up the model here. So now going to the KredX Score 2.0, and telling you what exactly this is. So I think one of the major changes for the investors that we have done is the score scale has changed. So instead of going from on a scale of 100, the new score will be on a scale of 100 to 1000, where there is no and it is not same as, so a score of 65 in the previous avatar is not the same as the score of 650 here. So you will see a basic entire spectrum of a score that is will be coming out into 2.0. What I also want to emphasize here is this score is not the risk score. This is not a version where we are saying that this is a score. A higher score means a safe deal versus a unsafe deal or a slightly riskier deal. What we want to say is basically a higher scores means that the flow that is coming up for this particular vendor from this particular enterprise in our and the overall mechanism or relationship between us is much better if somebody has a higher score as compared to somebody having a lesser score. So some of the new things that goes into this is vendor financial enterprise historical data. There's a big adaptive feedback loop that is there. So the algorithm keeps on learning in itself, getting feedbacks from different sources to see that how the score can keep on enhancing. So if it's possible, it's very much possible that today you see a deal of a score of, let's say 750, and tomorrow you might see the same deal with a score of with a score of 650. Because of the change in industry news or change in different variables which is coming into it. There's also, as I say, it's a dynamic scoring of deals happening. So the scores can pretty much change on a minute basis. What we baked into is a continuous portfolio risk management. So the model is both inward as well as outward looking, where we look into a lot of variables that we collect internally, but at the same time we also keep a tab on in terms of what is the kind of market condition or market scenario that is panning out. Also, of course, we build in into a lot of our own IP, or a lot of our own learning that we know about the trade finance or the supply chain finance market, different sectors and how different sectors are panning out. So all those things are now being used in terms of as a part of different variables into the model. I just wanted to show you how the scoring model comparison happens. So this on my left side is KredX Score 1.0, and what we plotted is basically on the x-axis is the score, and on the y-axis is the delays in payment. So if you see this the cluster which we are showing, which you can see on the left hand side, is basically where most of the cases that we have listed on KredX platform is, and the scores pretty much range anything from 60 to kind of 80, very rarely on the cases which goes outside of 80 parameter. And there are some cases which are delays which is substantial delays that has happened into. Now with KredX Score 2.0, what happens is, as I said, there is a lot of filtering that is associated with it. So a lot of cases will get filtered out even before they get scored here. But as you can see that the scores are pretty much going and created across from less than 100 till up till around 800, 900 kind of a score. So as I said, a 65 or a 75 score in the previous avatar is not the same as a 650 or 750 score in 2.0. So how to read this score is fundamentally is again, you have to do your own underwriting in terms of looking into the reports, getting more comfort around the enterprises and the vintages, etc. But you also looking into a score more as a pattern of how the flow or the cash flow of this particular vendor enterprise pair is as per the model. Some of the highlights that technology has helped us in terms of doing is a big part of underwriting is now tech driven. So it's a continuously evaluation of the process that is happening. We are really looking into we have really built up technology that is really looking into the data on like a minute basis. We have, so if you ask me to put the weightage in terms of how much weightage you are putting up on the acquisition during the acquisition time and how much weightage you are putting up on the portfolio management side, I would say maybe around 40% weightage has been put at the acquisition side, and there are 60% weightage is being given to portfolio management. So we are continuously evolving, continuously looking into each and every businesses, not only from the anchor or the enterprise perspective, but also from the sectorial perspective. If we feel that any sector is getting through stress, we instantly go into a mode where we start reducing the lines for or the exposure on those sectors, and start moving towards lesser and lesser exposure into all those sectors where we feel that there might be stress that is coming up. The entire decision making is very adaptive. So the machine learning algorithm itself works in a way that it continuously get feedback in terms of what all is getting declined, what all is getting accepted, but also in terms of how the payment is actually coming. If the payment is early or delay, and based upon that, it keeps on working on the variable and adapting to the scenario. Things to consider when investing. So how can investors, so also I want to spend some time on in terms of what you should be looking for while investing. I would strongly advise all of you to before investing into any deal, you should definitely read the reports at least for the first time very deeply before putting up before taking a chance to take a decision. Even if in the face value a lot of things to you might feel that you're not comfortable or not comfortable with, after reading the detailed report that our team prepares, you might want to look into and say that these are something which we don't want to consider, which we should be considering. So that is I would definitely suggest you to please make sure that you are reading all the reports carefully, at least definitely for the first time, and also if possible, whenever you are investing or reinvesting in the same deal, always check onto the report to see that if anything has changed since the last time you have invested. Also, I keep on, being a risk management professional myself, I also keep on emphasizing on the relevance of a score and how to interpret those scores. One thing which is very essential is the scores, a score being a third party score, a person or any entity who is trying to use the score always need to first benchmark the score and see how they are benchmarking themselves against the score. So anybody who is a new investor who is trying to use the score, what I would suggest is for the first few investment, first read the different reports, make your own hypothesis in terms of what is a good deal versus what is may not be a good deal as per you, and then benchmark your score accordingly. So for example, it may possible that what you are considering, since now in KredX Score 2.0 it's not a safe or unsafe or a less riskier kind of thing, it's more of a pattern of how the cash flow is projected to be coming into it. What I would suggest is, let's say you choose in a deal which the anchor name looks very good, and you're very comfortable with this anchor name, but at the same time the score looks low to you, but you are comfortable putting up your money in that score. You are, in a way, you are benchmarking yourself on for that score. So you are making a conscious or unconscious decision that this is a score at which I'm good to invest in a deal, as compared to, let's say, somebody else who might come and say that no, even if I need both, I need to be comfortable with the cash flow forecast or projected that is coming from KredX Score 2.0, and also in terms of what is the report telling me, and as well as what is coming up as a enterprise name. So make sure that all your decision is before investing in any deals, you are taking a decision based upon how the benchmarking is happening across the different score. And if this benchmark is if the KredX Score 2.0 is what score range is where you feel comfortable about. Also, a couple of things that I also want to say is, anything that you invest in the market has some bit of risk. It's not that anything doesn't has a risk. So please carefully assess what you are investing in terms of what are the different risk parameters that is there. What we do in our reports are we publish everything. We publish the vintage, we publish the performance history, we publish the various ratios, various financial ratios for vendors. We look into the enterprise, we say what all enterprises are there. We look into the concentration risk between a vendor and an enterprise. So a lot of these things are there, and it's being written in a way so that you can consume these reports easily. It doesn't take a lot of time. Possibly, if you once you become more used to reading our reports, possibly on a go-to forward basis, it will not take more than maybe around 10-15 minutes to look into reports. So look into reports and then take a call in terms of where you want to invest the money into. Also, I'd also request all of you that if you have gone through the legal agreement that you signed, it's good. If you're not, then please go through the legal agreement once, so that you become conceptually you become easier in terms of what you are investing in and what you're not investing in. As I always say that these investments carry risk, whether it's with KredX or outside, and as a more prudent investor, we need to make sure that we are factoring in all the risk in terms of how we are doing it and how we are taking the investment decision into. Now we are end at my presentation. So as I said earlier, we are now open for the Q&A. So if any one of you has any questions, we'll take it up. You can put it on the Q&A on your questions, and we'll take questions one by one, and I'll try to answer all. So this is a very relevant question which has come up come from one of our esteemed customer. He said that the question is, how have you geared for the impact of Corona? So I will answer it in possibly like two pieces. One is basically internally what we are doing and how we are doing in terms of for Corona. So we have starting tomorrow we have invoked the full-fledged BCP or business continuity plan in the company, which means that all our facility, the local offices will be closed, and everybody has moved to a work from home facility. The entire office is getting sanitized with antiviral and anti-disinfectant tomorrow, and post that the office will get closed. Then everybody will move to a work from home. There's a distinctive big circular that we have issued to all the personnel internally to looking into proper work from home habits, and how to make sure that none of our customers can be will get affected by this, and all the customers will be maintained, and we try to maintain the business continuity as much as possible. Now, moving it to externally, we all know that this coronavirus and COVID-19 is going to impact the economy. We have already seen the market is the stock market is getting routed. For people who doesn't know, there is a big impact that has happened not only in the equity market but the debt market also, with most of the debt funds, liquid funds, mostly every single funds, including the bonds, etc., is giving negative yields in last 1 to 3 weeks time. Um, um, the forecast, what we are hearing from a lot of experts, are that the worldwide economy is going towards recession. There is also a call that is coming up that says that maybe the businesses will be down by over 50 to 60%. So there, what we are doing is we are working with our so this is a time of stress, and this is sort of a global sort of a event that has happened, is which is going to affect of all of us. So what we are doing is, on externally, we are reaching out to all our customers, telling them in terms of what are the different measures that they can take in terms of to keep them financially safe. Apart from, of course, everybody is hearing about how to keep yourself personally safe, but we are also advocating them in terms of how to keep themselves financially safe. In terms of taking wiser decisions, we are reaching out to our vendor partners, we are reaching out to our enterprise partners, and asking them in terms of what are the payments patterns and how it is going to change. As of now, the impression that we are getting is mostly the payments, etc., which is already due, is going to be on time, except maybe a few delays here and there. The the demand, or the since the global supply chain has got affected, the demand is going to get reduced, and because of that there may be lesser amount of deals that will be coming on the platform. But I think most of the corporates are doing is they are looking in inward, and also taking a decision, should they be procuring or should they not be procuring, depending upon their cash flow situation. So I think everybody is bracing for it, and we are also bracing for it. We have become much cautious in terms of what we are underwriting and what we are not underwriting. There is a full-fledged credit committee which sits in KredX, consisting of 5 to 6 people who sits and discuss each and every case that goes onto the platform before onboarding them. So we have tightened our norms here, and we are trying to work it out on that. So moving up to the next question, there is another question which comes that are there steps being taken to prevent invoice of enterprise at risk due to ongoing disruptions such as airlines, infra, and steel? I think yes, that is there. Some of the sectors, I think we have taken a very early decision to reduce the exposure on them substantially. So we like airlines, infra, steel, etc., is something which we have taken a decision almost more than 8 months back, and start reducing the line substantially on them. What we also seeing is what we are also evaluating, not only in terms of the sector wise, we are also looking into companies wise. Because of the stock market route, a lot of shareholding patterns may change because of share pledges and all. So we are looking into all those aspects. We are already started discussion with a lot of our anchor banker companies to see that we are still in good shape, and nothing untowards will happen on those cases. So moving on to the next question. The question comes is, why is the escrow account more secure, and do you work with a bank for that? So yes, this is a very interesting question that has come up. So we started our journey with having an ICICI bank and work with ICICI bank for an escrow account. Then we moved to Yes Bank, fundamentally because technology as Yes Bank technology was far superior at that time as compared to ICICI. And being a tech company, we loved the good technology. So we moved to Yes Bank and worked on that. We have now in working with at least 5 banks right now. With we already have going at UAT with DBS Bank Singapore. We are also working with Kotak Mahindra, SDFC, Citi, to open a separate set of nodal accounts or escrow accounts. Now coming to why nodal or escrows are safer than that, because fundamentally nodal accounts are bankruptcy proof. What I mean by that is even if, let's say, a vendor becomes bankrupt, or a corporate, or basically, let's say the bank itself become bankrupt, these accounts are bankruptcy proof. So in case of, let's say tomorrow, if and this also I will also take back in terms of the mail that we have sent during the Yes Bank moratorium. Though the moratorium has affected us also a little bit, what also important to understand is we always continue to say that the money is safe, because we know that even if tomorrow Yes Bank will file for bankruptcy, there's nobody can touch the money that is lying in the nodal account. So that's why we have taken multiple legal opinion on that. We have went to RBI also asking them, and what we get is that the nodal accounts are fundamentally bankruptcy proof from bank's exposure point of view as well as from vendor exposure point of view. So that's the reason why we generally go with the nodal account concept. So moving on to the next question is, why the enterprise is supporting KredX to confirm the vendor invoices? Yeah, it depends upon different enterprises and what's their approach could be. So there are few enterprises who are working with us because they want their supply chain to be very smooth. I tell you that one example is, like, let's say again going back to my Toyota example, is, let's say Toyota has came up with a new model in the market, and they've seen oversubscription of that model, and they need to produce more, and they want their suppliers to support them. Now, in a typical scenario, what happens is the supplier asks the corporates to pay them in advance to support the higher supply demand that is coming from the corporates. But while working with us, what happens is these corporates can easily push their suppliers to go to KredX, get the supply chain financing, invoice discounting, and supply more to them. So as I said, a lot of times the corporates are working with us because we have proven it to them that we can smoothen their supply chain. Couple of times also there could be case where corporates could be interested in increasing their own working capital. So sometimes what we have also seen is corporates wants to move to a higher payment cycle once working with us. So it provides them a little bit of a working capital lifeline to them working with us, because we work with we provide this capital to vendors. And see, the beauty of invoice discounting is also is sort of an off balance sheet product for the corporate. So that's also the reason why they want to work with us on that. Okay, so there's another question, which is, will the new score give us more clarity on the delayed invoices from that enterprises? Yes, and as I say, it's an adaptive model. It looks into even a single delay in a payment from an enterprise, the score can change from today to tomorrow. As we also say that we monitor now, the new score is a more cash flow oriented rather than balance sheet oriented. So the more weightage is being given to how the flow is coming into our account rather than how the strength or the financial strength of the company looks like. So an example is let's say there's a large MNCs, maybe a Fortune 100 MNCs, which you and all of us perceive it to be a good MNC, but the Indian function may be not that well managed, and because of that, the cash flow are always not certain. So it may possible that the new score is basically going to give them a lower score, even though you feel that this enterprise is very large, and you may say that I'm more comfortable working with this, taking a deal of this enterprise because this enterprise is a Fortune 100 MNC, but we might be giving him a lower score because the cash flow that is coming from these enterprises are not as good as what is coming from, let's say, an Indian larger corporate. So yes, this can definitely give you a view in terms of the flow, how it is coming. Again, I would also say that we publish all those vintage performance and how the DPDs and etc. is coming, if there is any delayed payment in the past, in our report also. So if you go to our report, you can see a more detailed on just the vintages performance rather than looking into the score itself. So you have two ways to compare. One is the score, but also you can look into the report and see the detailed vintage performance for any vendor enterprise player. Okay, so another question is, what is the average return that investor can expect from KredX platform, and also what is minimum ticket size and lock-in period for new investor? Average return is something which depends upon fundamentally you. We list deals anything ranging from 10.5% to up till around 17%, and depending upon what you want in terms of what is your risk perception, what is your own risk analysis, what kind of sectors and deals that you want to take into. And I give an example that a lot of investors are very comfortable only taking the deals of Indian large conglomerates, but at the same time, there are set of customers or set of investors who are only interested in buying for startups. So it's a call that fundamentally you need to take. You can, if you ask me, I would say that you can make a well diversified, risk diversified portfolio, getting an average net IRR of somewhere around 13.5% easily on the platform. Also, the minimum ticket size, which we get a lot of question on what is the minimum ticket and why we put it, is because there is a stamp duty implication which is there. Each transaction that we do, we get it stamped, and we keep the stamp copy with us. Now, the stamp duty is something which is borne by the vendor, and each stamp duty has a cost because there is a minimum stamp duty that we have to pay. Now, if we reduce the size of the transaction to less than 3 lakhs, it's become detrimental. The cost become detrimental because of the increase in the overall annualized increase in the stamp duty cost for the vendor. So that's the reason why we keep the minimum ticket size. There's no lock-in period as such. You can buy a 30 days deal and you are invested only for 30 days. After that, you can pretty much withdraw the fund, or 60 days or 90 days. So maximum you can buy a 90 days deal, and minimum you can buy a 30 days deal. And once you get the maturity, you can pull in the fund if you want. So another question that comes is, how safe is KredX itself? Are you profitable, and does it require further funding to stay afloat? So pretty much as of now, I think we are pretty safe. I don't know if you're read, but we have recently raised a large round from one of the global investors, which global large investors. We have Sequoia and Tiger both on our investment board, and from the run rate perspective. Again, if you see the history of the company, we have raised before this round, we have raised 3 years back. A large chunk of the fund that we raised 3 years back is still with us. And then again, we raised a large chunk here. So we are not burning where we don't put our own capital into it. So we don't burn a lot of money. From that perspective, we have a long runway. Saying so, again, going back to the nodal and escrow structure, the another beauty of nodal and escrow structure is, even if something happens to KredX, the amount that is there in nodal and escrow accounts are pretty safe. It's bank, as I say, it's even KredX bankruptcy proof. So even if something happens to us in terms of it, you can pretty much ask the bank, and the bank being the nodal trustee or the escrow trustee, whatever money will be there into those accounts can be redeemed back to you. So if though again reiterating again, KredX as such is in a very good position right now, considering the latest fundraise that we have done. But when you are investing in KredX, you need to take your own due diligence in terms of where you are investing in, and look into the risk parameter first. Okay, so the next question is, do you plan to do purchase order discounting? What is that? How is that different from invoice discounting that KredX provides? And do you plans for PO funding discounting as well? Well, not at this time. We do get a lot of requests to do purchase order financing. Why we don't do purchase order financing as well as compared to invoice financing or invoice discounting is fundamentally two reasons, or fundamentally one reason only. A purchase order. A purchase order has execution risk. Invoice doesn't have execution risk. So how I say is, for example, if I have a purchase order, I still need to execute that deal or that order or that service. For example, a company gives me a purchase order to produce 1,000 shirts. Now, till the time I don't produce these shirts and give it to the company, the invoice doesn't get raised. So there is a big performance risk or big execution risk which is there between purchase order and invoices. Invoice doesn't have any execution risk because an invoice get raised only once the goods are received and services are delivered to the enterprise. So once invoice get really is issued, and the other party or the counterparty receive the invoice and accept that this is a genuine invoice, it's fundamentally you are not betting on the future, but you are betting on the past, because the work has already been done in the past, and now you are holding sort of a promissory note, where the counterparty or the enterprise is saying that, hey, I owe you this much money. And that's why we say that there's no execution risk in invoice discounting as compared to purchase order, where there is still a substantial execution risk which is involved. So moving it to the next question is, why is that KredX discount bill raised only on big corporates and not on other SMEs? This will help in increasing the working capital facilities for SMEs and increase the economic activity. I agree to your point. This is something which we, when we started initially, which we got a lot of requests for. The issue is fundamentally the verification of invoices at SME to SME level, and India has traditionally seen a big amount of fraud that has happened in SME to SME invoice discounting space. Give you an example is, if I start doing SME to SME, what will happen is a company will come to me which can raise an invoice against another company, which is fundamentally a shell company or a pseudo company opened by his cousin or his brother, and they raise invoice against each other, get it discounted, and both run away. So that is something which Indian ecosystem in invoice discounting has seen a lot. So that's why we have taken a decision that when we started that we'll only do with a certain set of companies which traditionally has a brand name to protect. There will be a certain set of corporate governance into place. So even if a lot of startups which we do into, the reason why we do a startups as a corporate is because there is a investor money that is involved. There's a funding that comes from large investors in these companies, and these investors infuse sort of a corporate governance into these startups, and some of these startups are even well managed than a lot of traditionally large Indian companies. That's what we have seen or experienced into. So that is why we, as I said in the beginning of my presentation, is we really like companies to have a good corporate governance, because this gives a lot of feedback in terms of how the company is going to behave in future. So that's the reason why we only do large companies. However, we are also thinking about having our own NBFC and using that fund to do SME to SME. We don't want to risk anybody else's fund for that, and we want to do a pilot or some kind of testing to see that if that is something where we can put our own capital at risk, and try to prove if that is a segment that we can contribute towards the economic activity of the country. So another question is, KredX MFA requires use of OTP to phone number. If someone is on travel outside India, then phone number may not be accessible. To solve this, KredX can send OTP to registered email address as well. This question has been raised a lot of times. So the reason why we don't send the OTP to email address is we have a two-factor authentication. If you all remember that your email ID is fundamentally the first factor authentication. So your email ID is which you use to log in into the system, into the KredX system. Now, if we start sending the OTP also into the email address, then what will happen is if your email ID is getting compromised, your KredX account will get compromised, because if anybody has access to your email ID, he can fundamentally do any transaction on the platform. So he can either buy or withdraw, change your bank accounts and then withdraw the account. So that's why the reason why we have chosen a two-factor authentication, where first factor is where your email address and the second factor is your registered phone number. However, what we are also working is our technology team is working on some kind of a authenticator app, which is like Microsoft Authenticator or Google Authenticator, which works more like an RFID concept and RSID concept, and we are working on that. So hopefully in few weeks time or in a month's time, you will see where you don't require to have the OTP separately sent on phone, but you can use these authenticator apps to buy a deal or do any other transaction on the platform. So moving on to the next question is format of the deal reports also changing to show the new parameters being considered. Yes, we are working on the newer version of the deal report also. We are making it more comprehensive as well as more relevant. Some of the aspect that we're looking into deal report is, as I already mentioned, is the different financial ratios, the vintage, etc. Also, I also want to share another tidbits here on the deal report is on the first page, on the right side of the first page, we also mention what is the invoice value and what is the margin that we are taking on this invoice value. I would also request all of you to have a look, because that gives me an additional risk mitigation on any invoice that we do into. But back to your question, yes, we are changing the risk report and to have the more variables and more things part of it. So moving on to the last question of the day is my question on the due date of the payment. That does the payment come directly from the enterprise to escrow account or from enterprise to vendor account and then escrow account? Is an investor supposed to look at only the enterprise credentials? So yes, on the due date or before the due date, whenever the payment always comes directly from enterprise to our escrow account. Our undertaking with our arrangement contract with the enterprise is enterprise should pay the payment to that particular vendor directly into our escrow account and not to any account of the vendor. So it's a simple format of we give the money to the vendor, but we get the money from enterprise. So the enterprise doesn't pay to the vendor, they pay directly to us. And once it comes to us, we ask the vendor for the payment advice. Once we get the payment advice, based upon the payment advice for which of the invoices the payment has come, we adjust the payment and give the payment to all the investors who has purchased those deals. So that's fundamentally we looking into. So I think that's the last set of questions that we have got an answer into. Thanks all of you to being part of it. I know it's our first webinar, so excuse us if there is any tech glitches or anything that may have happened. I'd request you to write to us on Investor Connect at KredX.com if you have any queries. You can also, if you are an investor, you can also write to us at care@KredX.com and reach out to us. Of course, you can send a mail to us directly at info@KredX.com also, and reach out to us for anything, any questions or any query that you have. I'm happy to take any other questions which you can send on these mails and try to answer as much of them as possible. Again, all of you, thanks a lot. It's a tough time in this coronavirus, not only because of the disease and the epidemic, but also because of the economic stress and the economical scenario that we are going through. I just wish all of you to be cautious, be inside, be safe, and keep yourself away from as much as possible from any of the social gathering. Be safe and wish you all a good day for today. Thanks a lot. Thank you. Have a great day.